Let's get a quick check of the markets at this hour. A lot of red on this board right now. You can see the Dow's pulling back fractionally, the S&P and the NASDAQ pulling back right around 0.25%, the Russell down almost 0.5%. This says oil prices have moved to the upside over the last few hours. Looking at WTI up over 4% higher right now. Right now, we also want to turn things over to our senior economics reporter, Steve Liesman, with the highlights from Kevin Warsh's hearing on Capitol Hill. Steve, I want to get your take on what you heard and what you saw.
Yeah, he underwent pretty sharp questioning about potential conflicts of interest out there, as well as his vast holdings, and whether he had promised to President Trump to lower interest rates. On the first question, Warsh said he will sell virtually all his financial assets that amounted to the hundreds of millions. But Senator Warren and other Democrats expressed concern that it would never be disclosed what was in several financial vehicles worth hundreds of millions of dollars that could contain conflicts. While Warsh has ultimately he said he wouldn't disclose them, he said he would sell them.
I have worked tirelessly with the ethics officials at the Office of Government Ethics.
And you have not
come to an ethics agreement with them and have
assets.
Agreed, Senator, to sell all of my financial assets, including the Duquesne assets.
Are you refusing to tell us if you have investments, for example, in vehicle setup to advance Jeffrey Epstein? Is that what you're telling us? You just won't tell us?
Senator, what I'm telling you is that those assets that you represent at Juggernaut will be sold if I'm confirmed before I take office and sign the oath of office.
On a separate issue, Warsh insisted that President Trump had not asked him to lower rates, and he had never agreed to do so. There was pushback from one senator who cited a Wall Street Journal interview where the president appeared to say Warsh told him that he thought rates should be lower. Quite a different thing in my mind anyway. Warsh called for regime change at the Fed, including a smaller balance sheet that would allow for rates to be lower. He repeated several criticisms of the Powell Fed, including policy errors that he said led to the inflation that followed the pandemic. And Warsh was generally upbeat about technology and the potential of the economy to boot for higher potential growth. And while Warsh received strong GOP support, remember his nomination not expected to go forward because Senator Thom Tillis repeating today his intention to hold up the nomination while there's still a criminal investigation into Fed Chair Powell. And just one more thing, Frank, if you look at interest rates, they actually drifted a little higher while Warsh was talking. And the probability of a rate cut, any rate cut this year, is down to just 30%, Frank.
You know, Steve, to your point, the 2-year and the 10-year both moving a few basis points higher. I want to go back to what seemed to kind of be the elephant in the room. President Trump on CNBC earlier today saying that he would like to see rate cuts as soon as possible if and when Kevin Warsh is confirmed. Kevin Warsh himself, he really focused on Fed independence. Do you feel like he answered the questions, whether they were direct or indirect, about the president's influence on his decisions?
I think it depends on if you're a Democrat or you're a Republican, Frank. I'm sorry to say. I personally did not read the Wall Street Journal article as Kevin Warsh promising to lower interest rates. I thought it was interesting that there was a hypothetical given to Warsh that said, well, look, if you lower rates to 1%, won't that cause inflation? And he refused to answer that. Warsh did do quite a dance to make sure he was not criticizing the president or anything he said. I thought, Frank, that he understated the challenge that the president has meant to the Federal Reserve. In his opening statement, Warsh said that it's okay for elected officials to make comments and express their preference for interest rates. Of course, President Trump has not done that. President Trump has gone much, much further. He's lambasted the Fed, lambasted Powell. He has fired Lisa Cook, the Fed governor. He's threatened to fire Powell. So I thought Warsh went out of his way to make sure he was not critical of President Trump. But I also think it's a long way to say that he promised the president he would lower interest rates.
All right, Steve Liesman, senior economics reporter. Steve, thank you so much for your insight and analysis on a big day like this. We also, of course, have the investment committee here. Joining me for the hour, we have Joe Terranova, Jason Snipe, Rob Sechan, and Josh Brown. A lot to parse, a lot to break down. Joe, I'm going to start with you. We were talking about Kevin Warsh and his independence yesterday after Steve brought us his opening statements and pre-prepared remarks. What did you make of what he had to say? Do you think anybody who is concerned about Fed independence, do you think those fears have been calmed after this?
So I don't think anything about Kevin Warsh is related to his qualifications. I think everyone understands he's more than qualified. He is disruptive, which where the Federal Reserve is today in 2026, I think is a needed dynamic. I think if I'm in President Trump's administration and for the president himself, They're watching this testimony today, and there has to be a way that they pursue the transparency that they claim to be seeking in a criminal case against Chairman Powell without going to that degree and therefore allowing the Senate to confirm Kevin. To me, that gets you to where everyone ultimately, including the administration, is in the best place. Kevin Warsh is the Federal Reserve Chairman, and the only way you get there, is by removing that criminal court impediment that's in front of us. I think today, to your question, he did an adequate job, a job that he needed to, addressing the fact that he is an independent thinker and that, in fact, he will move forward with monetary policy, regardless of what the administration's wishes would be. And I think the bond market is validating that perspective because yields are ticking modestly higher.
All right, Josh, I want to come over to you and get your take. Very important to note, the markets did move lower after the hearing began. However, oil prices also move higher. Some thought is that as we're nearing the end of the ceasefire deadline, that puts some pressure on the oil market, which also puts some pressure on the overall stock market. But Josh, I do want to get your take on what you heard and what you saw.
Yeah, I think that there's no surprise in here at all. I think he will be confirmed. I think everyone knew he would be confirmed. I'm not sure that there's any sort of read-through into any specific part of the curve that's worth pointing out. I just think the bond market has understood for a very long time that this would be the next phase in Fed governance, and we're already sort of looking past it. I think the more interesting things happening, I agree with you guys, are happening in the commodities, specifically oil. That really has nothing to do with the Fed. The Fed can't lift or drop the price of oil. They can't jawbone it. They can't move it around with their feelings. And that's really been a much bigger factor in the push and pull for stocks over the last, let's call it, 4 to 5 weeks.
CJ, I want to come over to you. He mentioned regime change at the Fed, things like changing when the Summary of Economic Projections is put out or compiled, lowering the balance sheet, says the Fed shouldn't hold long-term treasuries. Any thoughts in your mind about what he said and how it could impact the financial markets?
Well, he certainly had a tightrope to walk. I mean, Trump was watching this, no doubt. He wants rate cuts come hell or high water. And, you know, Kevin has to convince the majority of his fellow committee members on any policy, any possible policy change. And, you know, he probably came under fire. I know we didn't get to hear the early parts of that because we were getting ready for the show. But the reality of it is he went from a policy during the global financial crisis of advocating for higher rates to a policy on possibly reducing rates when the data supports it. I think he came across about as well as he could to all the constituent audiences, including the Republicans who want to see deficit reduction. So, listen, I don't know that he could have done any better. He certainly presents well. He's incredibly articulate. He has the background to do this, and I have no doubt that he will get confirmed. It's just a matter of time for him.
Yeah, I don't think his qualifications are under any type of question. I think everybody agrees there's a consensus. He is qualified for the role. But, Jason, I want to come back over to you and ask you the same question about his independence. I don't think the president did him a lot of favors on CNBC on Squawk Box earlier today, just kind of putting a shadow over this. Your thoughts on his independence and how the market's receiving all this?
No doubt about it. I mean, it was a tough needle to thread, without a doubt. No surprises for me in terms of the commentary. I think he did it. I think to Seich's point, I think he did as well of a job as he possibly could, focusing on the independence, focusing on the dual mandate, and focusing on labor. I mean, there's been a lot of talk, obviously, on rates and where we're going on forward, and obviously the market is kind of playing into that narrative as well. But I think he handled it well, and clearly he will be the new Fed chair. So no surprises here, and I think we'll kind of see how things evolve once he gets in the seat. So,
Joe, pick your metaphor. Threading a needle, walking a tightrope. It was kind of a dance he had to do right here. One thing he did say, though, is that rate cuts would help a broader range of people. I'm paraphrasing. It's not a quote, but he did say rate cuts would help a broader range of people. It seemed like he was kind of alluding to people on the lower end of the economic spectrum. The fact that he said that rate cuts would help, is that dovish in your mind? Is that just an actual analytical take on what's going on in the economy? How did you take that part?
I think that's an analytical understanding that we need to lift up a large part of society that has not joined along in this K-shaped economy that we've all spoken about. We've kind of forgotten the people that are have-nots in the 2026 economy. So I think that addresses, and hopefully it's in action, not just in words. The offset to that was what we heard regarding his thoughts on the balance sheet, which maybe indicate at times of stress for financial markets, we're not going to be able to look towards the Federal Reserve to get the type of support that we have received in the past.
The question, though, is not will it help? It will. The question is when to do it, because you don't want to make this worse. There's certainly a risk if you cut now in the midst of everything that's going on of de-anchoring what is long-term inflation expectations. So there's this perfect time, and again, he's walking a tightrope then. The entire Fed is walking a tightrope until we can get inflation expectations to stay low. You cannot deal with issues in the labor market and issues in income inequality until that happens, because you're going to compound the problem prospectively if you do it too early.
Josh, you jump in for
I
one
totally
last
agree.
comment.
Yeah, I very much agree with what Rob is saying. You know, when we don't even know for sure that low versus high interest rates are good or bad because we have such a bifurcated consumer. One of the things that I was saying a couple of years ago was that actually, perversely, high interest rates turned out to have been a stimulus program for the top 10% of households who had cash that was literally spitting out more cash into their accounts. It actually produced a wealth effect for people who were taking no risk whatsoever. Older people, people with huge cash balances, people that don't have mortgages, people without debt. All of a sudden, they were earning 5.25% on their cash, something that they hadn't seen in a generation. And that feeling of being even more wealthy probably helped fuel even more inflation, especially if you're looking at housing in some of the top cities in the country, the prices for apartments, for condos. So even if we keep rates high, it's not a guarantee that will stop economic activity. And to Rob's point, even if we drop rates, that's not necessarily going to benefit the people who are struggling if it screws up the longer-term inflation expectations. So I think that Warsh talking about being nimble and using better data is actually the important part. Because just when you think you know what to do with rates, the economy could throw a curveball and you say, oh, wait a minute, that's how this works? And I think the Fed was late to figuring this thing out.